All right, weekend's over. Back to work here. Tonight's Monday evening. Hope you guys enjoyed the weekend. Get a big week ahead of us. End of the month. Holiday weekend coming around the corner here. It's Monday evening. You know what that means? We're getting ready for Tuesday's trading session. Got a bunch of ranges. Got a bunch of pendulum swings. Got a bunch of good trades setting up for tomorrow. I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money on Tuesday. Got a lot to cover tonight before we jump in and get this video going tonight. As always, make sure you subscribe so you don't miss tomorrow night's video upload. And as always, I appreciate you guys tuning in. If you enjoyed the video tonight, hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro, right? Let's get ready for Tuesday. Where are the best trades setting up for Tuesday? Well, you'll see here once again, it definitely feels like the summertime season right now. Got a bunch of ranges on the Nasdaq, range on the S&P, range on the crude oil. Remember, I love ranges. You should too. Hopefully by the end of the video here tonight, you'll know why I love ranges so much. Ranges are magnets. So, of course, we're selling high, we're buying low. I could definitely see some nice shorts up overhead here on the Nasdaq, the S&P. And even though the oil, I know oil is bullish, we got a range below, bunch of resistance up overhead. I'll tell you, there's a lot of great short setups across all three of these markets here for tomorrow. I'm going to cover the sell side. I'll also cover some breakouts because definitely oil, Nasdaq, S&P, there definitely are some breakout potential here for the buy side tomorrow. So we'll cover both sides of this market here in tonight's video. That way, whether you're a buyer or a seller, you'll know exactly where the best entries are going to be. Now, before we jump into each individual chart, I'm going to go over each individual chart tonight, all my favorite trades for tomorrow. Before we jump in, though, make sure you're aware there really isn't any major news in the schedule for tomorrow. We've got some small stuff. We get consumer confidence at 10 o'clock, international trade at 8:30. I don't think any of that is going to be the big market moving event tomorrow. I would expect, though, the markets to be watching closely here for tomorrow. For Fed speakers, we got Barkin early in the morning, daily, of course, later on towards the afternoon session. But remember, right now we have the G7 summit happening in Europe. We have the NATO summit happening later on this week. I believe it's tomorrow on Wednesday and Thursday. We got Powell and the ECB summit later on this week. So I don't expect any of these big Red Star news events to impact us that much tomorrow. There really isn't any news on the schedule that we know about that should be a market mover. But I definitely will be keeping my eyes open tomorrow, my ears open tomorrow. We'll have our news feed running tomorrow in the trade room because we have to think, right? Fed speakers, all the biggest political leaders in the world are on their private jets flying to places, and that could definitely produce some juicy headlines, and the markets love those headlines, especially as we go into the summertime season here. Don't forget, Friday's a half day, right? We're going into that holiday weekend this weekend, so we really have quite a bit of emphasis on the next 3 days. It's the end of the month. It's a holiday weekend. Traders want to make their money early this week so they can go get out of town ahead of that 4th of July coming next Monday. So I would definitely anticipate the next couple days should be pretty good for us in our trade room. So definitely stay tuned for more tonight. We'll talk about some of the best trades are going to be here setting up for Tuesday. But keep your ears open tomorrow for those unexpected headlines coming out of the G7 summit, coming out of the NATO summit. They're all, again, it's this time of the year. All the big players, they're gathering around the world for these big economic, symposiums, forums, whatever they want to call it. All right, back to our chart tonight. I'm going to cover all my favorite trades on each of these markets, whether you trade one of them or you trade all of them. Make sure you stick around all the way to the end. I'll provide different trade variations, different setup ideas, and I always try to save the best stuff towards the end. So I'll give you a reason to stick around all the way toward the end of this video. All right, let's jump right in though. Cover my favorite trades here for tomorrow. Let's get this thing going here on the Emini Nasdaq. The Nasdaq right now is bearish. The kind of the three main key components right now that are telling me where the best trades will be for tomorrow. One is basically a bear market into a trading range, and you'll notice at this point we've basically gone above the range. we call this range rotation. We went above the range. We rotated back down below that range. Notice how it's almost equal, right? Almost identical how much we go above and how much we go below. Well, now you can see now we're rotating up off of that low. And so now we're anticipating now this rotation will try to take us at this point, try to take us back up the ladder, back up into some of those resistance levels up overhead. And at this point now, it'll be really up to the buyers, right? Can the buyers hold this and retest those highs, right? That big blow off top that we saw we got to our desk this morning, or will the buyers fail on this and end up crashing back down into that trading range? That's definitely something we're looking for here tomorrow, right? That bear move into a range. They rotate up off that low as it kind of slingshots on the other side. We then wait for those buyers to try and fail and then potentially get one more leg lower. Or again, buyers may hold this and blast up to retest those highs here. That is one very big clue here. Another clue, if I draw a trend line right off of these lows, bring it right up around that high, can we think of anything better than to have an expanding triangle up here, right? There's your pendulum swing up there. So if we're thinking this thing might pop up, the buyers may struggle. I don't know. I can't think of a better place to look for a short trigger, a stop run, than up at those highs of that hidden channel. That is a great clue. And really another big clue in this chart is, and you kind of play this both sides, there's a lot of open space below. So, if these buyers, if they fail and we spit out the bottom of this thing, there is a ton of open space down there until we reach that basically 811 and 3/4, right? That's basically the next big objective as we go lower. So think about it. The sellers have a lot of wide open space below. How about the buyers though? The buyers, I'll tell you, we came in this morning and we thought we would see the buyers come in and really punch this thing higher because of that big move up that we saw last Friday, right? We assumed there'd be a lot more buyers waiting down here, but it rolled over. And so, boy, I'll tell you right now, I do realize there's a lot of bullishness coming out of last Friday's, big move higher there. I understand that. But I'll tell you right now, it's difficult to find a good long setup right now. I would imagine there are, and keep in mind, everything we talk about right now in the Nasdaq can also apply to the S&P 500. I would imagine there were buyers accumulating positions today around that 12,000. There was a big 200 moving average down here in some slower time frames. So I would imagine buyers are accumulating positions in this area. But if your plan is to buy a pullback up here, if your plan is to buy it as it's going higher, that is, in my eyes, that is a rookie mistake at this point. That is a very low probability trade. And as a short-term trader, my job is to follow the short-term momentum. Right now, momentum is bearish. And again, unless you're long already off these lows right now, it's very difficult to justify as we go higher trying to buy into this area until we can see a real breakout through these highs and try to make that next leg going higher here, which is definitely a possibility. But right now, the buyers have to really show us a whole lot more on this. So we have a lot of options here to make some money tomorrow. I think the key right now is going to be, do we see a shallow pullback? Do we see a kind of a deep pullback, or does it really pop up and take out those highs, right? Again, it's difficult to find a buy setup up here because as we go higher, we get worse, right? The risk-reward ratio gets worse as we go higher here. So how can we look for shorts at these three areas? These are pretty much the areas that you want to think of. You could also, I definitely wouldn't argue with you if you drew the channel like this. So there could be a little bit tighter channel coming down, which would mean even more resistance right there here. So there's a lot we can look for as far as shorts coming in off of that high. Here are three techniques I'll be watching for tomorrow to short that next bounce. The first one is a shallow pullback. Let's say, for example, all we get is that pendulum, or maybe all we get is off that little channel up there. If all we see is a shallow pullback, what's my concern? My concern is I'm selling too too low. And so the trick to avoiding getting kind of stopped out or a premature stop and run on a real shallow pullback is to use a trap setup. What I'll do in this case is I'm going to wait for those buyers to come back into the market. I'm going to see if they'll try at least twice. And the reason why we need a second try right now is because I need to be able to use that swing high for my trap setup going lower. Okay, this is a fantastic setup. And again, this would be used if all we get is a little pop up, right? We don't really get all the way up into the juicy levels we're looking for here overhead. This would be a great, we call a trap setup above that prior high. That's a great way to sell on a relatively shallow pullback. Now, what if we really punch going higher here? Again, I love this area, right? Got trend line overhead, pendulum overhead, channel overhead. Again, very difficult to want to buy this pullback because your risk is here and your reward is there. Not a very desirable trade for experienced traders, and therefore it is more likely to fail. So how do we sell this though? Here's the problem. The problem is this momentum really starts to swing as we come off of that low. That's why I said rotation off the low. It's a big deal. So in this case now, we're still going to use that same two-try failure, but now we don't necessarily need that trap because we're not really that low anymore. I want to see buyers trying once. I want to see buyers trying twice on the pullback, right? It'll look a lot like this, where it pops up, we try once, we try twice. Now think about where all their stops are at that point, right? Where are the stops of those buyers? Remember, we're left to believe these are inexperienced traders at this point, right? These are not the big money, smart money in the market buying these pullbacks. Down here, absolutely. But up here, no, right? These are the weak hands in the market right now. Think about how tight your stops were when you were a rookie. Mine were really tight. And so I can sell right into those stops, right? For what we call a two-try failure. The easiest money you're going to make as a trader is when you're getting short and buyers are caught stuck in a long position. Now remember, this is really where the fun begins. At this point now, I can now, as the market rolls over and goes lower now, I can draw a trend line off that low. I can bring it up around that high. See, I'm doing that. And then what I want to do is I want to short that first test, right? That first test off of that new channel. Right? So again, we pop up, we go into overhead resistance. We're a little bit bullish at that point now. One try, two try. We're running stops, selling into stops. That way we're selling and the buyers are selling as well. And then as we begin to roll over, I'm looking for traps off the high. I'm looking for failures off the high, right? The same setups that we teach inside that free trading course on our website, which reminds me, I know that most of you guys and gals have taken the free course. You've learned all the setups. I'm getting a ton of emails every week about you guys making money on your own accounts by using everything from the free course, setups like traps, like failures. But listen, if you're here for the first time today, if you haven't taken that free trading course, if you haven't learned all the setups I'm talking about in this video, I'll put a little pop-up there for you in the upper right-hand corner. If you're like me and you hate missing the best trades each day, or you're taking too many losses, or maybe you're like a lot of my students and you're trying to transition into full-time trading from a full-time job or a full-time career, the roadmap that I teach in that little pop-up, that free course, that'll get you on the right track and start getting you the results you want out of your trading. That way you won't miss the next best trade each day. So again, as we go higher, 1, 2, and then back down again, find that new channel and drop it back. Now, where do the bears want to go? They want to bury that low. Right? So we're selling off the failure, we're selling off that first test, and then trying to run that sucker back down to retest a low. Now, one more thing. What if we end up all the way back at that high? Now what do we do? Here's a really easy way to think about it. The bigger the move, the bigger the two try. So for example, if we go up into this high right here, I can still be relatively aggressive because it's not a huge reversal at that point. So buyers once, buyers twice. I can be pretty aggressive at that high. The deal is if we end up all the way back at this high now, we will assume this is a very strong move going higher. Again, still not a great place to be a buyer because, again, you're still buying right into those major tops, right? That's where all the smart money who bought down here is where they're taking profit up here, right? Professional traders are not buying up here. They're buying low, right? Remember, buy low, don't buy high. Anyways, if we go real strong going higher here, now what you want to think of is, and we'll obviously do this together tomorrow in the trade room, is you want to think now it's going to be a bigger one, a bigger two, right? See how big these are over here? Right? See how big those are? We go up, we go 1, 2, right? In other words, think about it like that metaphor of that big boat, right? That big, that big battle tanker, whatever it is, right? The bigger the move, the wider and the more obvious those two tries need to be. So again, if I'm selling way up here, it'll be a bigger two-try pattern than if I sell down here. Hopefully that makes sense. But the same thing applies though. As we go higher here, I'm looking for those buyers to come in, try a couple times, and then hit those stops. And then as we go lower, right, we start thinking about that new channel. This really could be the best trade tomorrow right here. In all reality, I would love to see these guys run this all the way back up. Take that high out and then see those, right? See the weak hands trying to force it, and then again get that short off that high, and then again grab that trend line, grab that channel for that reversal back down again. All right. Now think about this. All of this stuff, all these setups can also be applied here to the S&P. Okay. Now, next question. What if we go lower, right? What if we go lower? How do we trade breakouts going lower? How do we buy this thing? Can we buy it as it goes higher? We definitely can. Let's go now to the S&P. The S&P is very similar here to the Nasdaq. A lot of what I've said here on the Nasdaq can be literally copy and pasted over to the S&P. So I'll try my best not to repeat myself too much on the E-mini. The E-mini, you'll notice, is, what's the best way to describe it? The E-mini is a little bit more stable right now. You know what I mean? It's not as bearish in the short term as the Nasdaq, and you can kind of see why, right? For example, we have that same bearish move into a trading range. We have that same pop up, but what didn't happen in the S&P? We didn't get that full rotation, right? See that? The Nasdaq took out that low, and now the Nasdaq's rotating back higher. That's a really big clue. Okay, this definitely does not have that. So we have a bearish range. We definitely can see that range acting as a magnet. We definitely can assume that bears are looking for shorts off resistance, off resistance, off resistance for that move back into that range. But at the same time, though, it almost feels like the buyers are a little bit more potential on this. And so I think it's worth time to think about, well, it's okay, so how would we buy, something like this going higher here? And then obviously we'll talk about the breakout going lower. Keep in mind the same thing we talked about on the Nasdaq regarding that shallow pullback, that deep pullback, and that really deep pullback, right? Remember what it was again? It was a trap. It was a two-try failure, and then a bigger two-try. Remember that from earlier? Okay, so keep that in mind as we go higher, because again, it's kind of the same stuff here right now. We assume that there were some very wise traders, well, maybe not wise traders, but big lot traders who were building positions on this deep pullback. I would have assumed so. Why? Because of that big move up that we saw on Friday. We came in this morning and I personally thought we would see those buyers grab these lows and run this thing right back up to retest the high, but they didn't. They actually went up into a range instead, and that range is the big clue. So not as many buyers coming in as we thought, but they definitely have a little more, I think, of a hold on this than the Nasdaq shows us. So as we go higher here, how do we buy a breakout going higher? How do we sell a breakdown going lower? The most important thing right now is that we have to get above this range. The buyers have to hold a pullback and go. Notice back here what happened, right? The buyers had everything they needed right there. They had a strong pop up. The buyers came in. They tried to buy that pullback. And I'll tell you, you would have thought they would have blasted that thing right back up to those highs. All that big money coming in at those lows. All the smaller money coming in, buying that shot. But they didn't. And so this is the challenge the buyers have right now. Same thing for the Nasdaq. We have to get up above that range. Not just enough to get a breakout, right? Because again, that's a good chance it's going to come right back down to that trading range. The buyers have to now go out and they have to blast, right? They've got to hold and they have to really jump off that moving average. Okay, so probably the two most common breakout patterns, and we'll talk a few more going lower here in a second, but the two that I would look for on both the S&P and the Nasdaq, one will be the 1, 2, 3 breakout, which is the pop up, the hold, the pullback, and the jump, right? That real big jump. Now, here's a really good rule of thumb. When I find a 1, 2, 3 breakout, 1, 2, 3 breakout, okay, I'm going to go out, I'm going to draw a trend line off that high. I'm going to bring that trend line and make a channel off that low. Watch the moving average. Okay, this is the 21 EMA on all of my charts. Okay, watch that moving average. If that moving average does not clear well above that high, in other words, I want that moving average well up above that high like that. Okay, that's an easy way to know if the breakout is strong enough. Because think about it. It's very easy to think, we might go up, we might pull back, right? They may blast and run higher, but now am I really going to buy right into that high? It might work. It might work, but that to me is a lower probability trade. Not in a long-term bear market. Again, we're short-term bearish, kind of medium-term bullish. This is a long-term bear market right now. Look at a weekly chart, right? And you'll see for yourself. So if we were back in the good old days of buy the dip, right, and everything keeps going higher, I could probably justify that. But we're not quite in that environment anymore. You're more than welcome to buy that pullback if you want. What I want to do, though, is I'm looking for that now to fail off that high with that 1, 2 try failure back down into that range. However, if we can get this thing to pop up, if we can get this thing to hold the pullback and really blast through it, then as we find our new channel, think about it like this, right? It'll blast up, right? It'll move up. The buyers will come in, they'll buy the pullback, and they'll just jump, right? It'll fly right through that high. Most of the time, this will also be accompanied by some sort of headline. Right? The G7 summit says we're doing this and everybody loves it, right? It's going to be something like that. It'll be combined with some sensational headline on the front page of Bloomberg and Yahoo Finance. You know what I mean? It's going to have to have something more, right? The headlines will say, risk on, everybody's back to the party again. You know what I mean? It'll be something like that. So that will be the 1, 2 blast. Now, at that point, mark that high, mark that low. Think about where those traps are. Can I get that moving average up above these highs, right? And then from there, it's that trap. It's that failure setup. It's that pullback setup as we go. All right. I'm not going to go over all the entry techniques here in this video, but if I can get that 1, 2 blast again, get that moving average up above that high, we call that acceptance in our video classes. If I can get that, then I can drill down, trap below prior swings, failure off the moving average, pullbacks off the moving average as we go higher. Where do you think the market wants to go at that point? What would you say is the best target for the buyers at that point? Think of it this way. The size of the first leg is oftentimes equal to the size of the third leg. Okay? Trends love to do that. They love to go 1 leg, 2 leg, and 3 legs. And the first leg and the third leg are the ones that are usually symmetrical. It's the middle leg that's oftentimes a smaller leg or sometimes a larger leg. So be aware of that. If we go up, be very careful buying up here. Hold that pullback, blast going higher, grab that high, find that channel. And again, I'm obviously simplifying it right now, but we're looking for that pullback, that trap setup, that failure setup, the same setups you guys learn inside of that free trading course. Here's another one, and this may also be in play here for tomorrow as well, and that is a pop and grind. Pop and grinds are a little bit different. They pop up, But then instead of pulling back to the moving average and blasting, as I always say, they begin to grind and grind and grind, right? That grind is a big, big giveaway, because basically what it tells you is, it tells you that all the sellers who are short off that high this morning, they are getting out. That is what causes a market to grind like that. Okay, it's not magic. It's the other side of the market getting out. Buyers are not buying these shallow pullbacks in most cases. These are sellers getting out. When that happens now we draw that channel nice and tight. We mark it up off that big low, and we start looking for, and again, you want to get that moving average coming up, right? You want to get that trap below prior swings. Trap in those, speaking of traps, trap in those bears below the moving average and use their stops as fuel. Again, first leg, right? First leg, third leg. And if remember, there's a lot of space up top here, right? This is a lot of space up top here on the S&P, back to 4,000. On the Nasdaq, I want to say, what was that big open space overhead to? On the Nasdaq, it's 12,446, 12,512 there on the Nasdaq. Nasdaq is the same exact thing though, right? Nasdaq's trying to get that, right? Nasdaq also up, hold, and blast, right? Really get a blast those highs. At this point, doesn't seem easy right now, right? Doesn't look very easy. Okay, how about the sell side? Okay, last but not least here, both the Nasdaq and the S&P, how do we sell the breakout going lower? Now again, there's a lot of open space down here, down to that 38.43. Same thing on the Nasdaq. How do we trade breakouts here? Here's the good news. The good news is we're already bearish into a range. So I can be a lot more aggressive going lower for a short than I can be going higher for long, right? Think about it. As this thing tries to spit out the bottom here, right, that'll be a lot of momentum. Here is the progression. Here is the progression that you want to learn, all right? Think about these 4 different ways to trade this. You ready? Okay, this is the good stuff right here. As we break down, strong move down, shallow pullback, lower low in price, traps. We call these 2-try traps. These are money trades. Remember, the key on this one is strong move down, shallow pullback, lower low in price, traps, baby. Okay, that's 1. Now, sometimes that strong move down ends up grinding. One of my favorite types of trades right now, the pop and grind. Draw that trend line off that low, mark it up off that high, find that prior swing, get that trap above a prior swing, get above the moving average for a failure, right, and run those stops. Again, first leg, third leg. With me so far? That's 2 of them. Ready? One more here. 1, 2, 3 breakout. This is the easy one. We take out that low. We pull back to the moving average. The bears come in and they blast, right? It's a little bit different than the pop and grind. It's not the 2-try trap, right? It's a very distinct 1, 2, go, right? Once they do that, mark that low, mark that high. Grab those traps, grab those failures off that high. Right? Makes sense? Now, imagine now, we get that 1, 2, 3 breakout. We get that short that runs. Okay? So we're already in this position now. We take first leg. We take third leg. We get that measured move. Now what happens? Now we get profit taking. When it comes to profit taking, what will happen is the market will bounce, right? It'll bounce. Remember, we're already short off that pullback in this example. Okay, that could be any one of those breakouts, right? We find our measured move. Okay, the market bounces now. As it bounces, is this a reversal? Hell no, right? This is just profit taking for the bears. So now what you do is you go out, you trap in those buyers trying to buy it for reversal, and you use their stops as fuel for a retest of that low. Does that make sense? Right? So again, it's that strong move, shallow pullback, lower low, right? There's that trap. That's one of the trades I love. Or maybe it pops and grinds down for a channel there. Or maybe it's one of these, 1, 2, 3 breakout. Either way, once we start getting down towards the end of that first leg, third leg, wait for that deep pullback. Do not confuse it for a reversal. Wait for the rookies in the market to confuse it as a reversal and sell right back down to retest the low. Okay, that is the 4-step progression of a breakout, and I hope you took some notes on that because that took me quite a while to learn, and I taught it to you in only about 30 seconds there. So now we know as we go lower, right? Now we know as we go lower, that's for the S&P, and it's also for the Nasdaq. You want to keep on rolling? Let's keep it going, baby. How about the oil? Finishing up here right now for the crude oil. I'll tell you, oil's definitely bullish. There is no doubt about that. The buyers have full control over this momentum right now. But you'll see real quickly here tonight, it's not easy to be a buyer at this point on this chart. First thing, there are 3 simple clues to it that can tell us where the best trades are for tomorrow. I think there's probably one extra clue I didn't put on this breakdown. The first one, of course, is that range rotation off the low. Now look what happened here today. It is a bull market into a trading range. We go below the range and we rotate higher, right? This is the same basic idea as the Nasdaq. So the Nasdaq, of course, is a bear market. Same thing though, right? Rotating off that low. Now look what happens up here. I want you to see this because maybe you're wondering why I say 2 tries all the time. Here's a really good example. So we rotate off that low, right? Very strong bull move. Look what happens. As we pull back to the moving average, the buyers try once, the buyers try twice. This is exactly why when I try to sell the Nasdaq tomorrow off the high or the S&P off the high, it's exactly why whenever we see a rotation like that, you want to let them try twice on the pullback off the moving average. Their stops are right there. The buyers, of course, never get their stop, their stops run, and the market keeps on pushing higher. Now, what I think is very interesting about this is we see that there's a very strong move higher, right? What do we always say? Strong moves, they love to pull back and give us another leg higher. Would you say that is a strong move higher right there? Right here? This guy right there? No. I would say this was a very strong move. I would say like a good market should, right? It retested that high. And so at this point now, we call this mission accomplished, okay? The buyers, they've accomplished their mission. The buyers had a strong rotation off that low. They tried twice. They finished off that retest. And now at this point, where do we go for next? Right? That's why I look at this chart right now. The buyers definitely have control. But right now, though, they have pretty much done everything that we thought they should do. They took out their pendulum swing. They got the pullback and retested. At this point right now, we have to assume it's either breakout going higher or it's going to be, you guessed it, failure back down into that trading range. Right? Those are the only 2 scenarios we have to deal with right now. Okay? It's either breakout going higher or the short back into that range. Simple as that. It's all because the buyers have accomplished their objective. Strong move up, they retest that high. Now, second item on this is major resistance. This might be the biggest clue when you combine it with the range below. Ranges are magnets, right? So, look left, and you probably already see this, but we are right at a major top. You'll notice a major top. Plenty of space overhead. And look at that wide open space above, right? Plenty of space to 114.84, 115. Plenty of space there. So if the buyers, if they can push through this, better fill your gas tank up tonight, right? If that's the case. It'll probably wants to go 115 if it can break through this area. But again, think about what's happening right now. We have a range here, a range here, a range here. Think of all the volume that's piled up around this 105 to 108 area. Remember, the more overlapping candlesticks there are, the more that acts like a magnet. So here we have not only a major level of resistance, which in most cases is not enough to want to sell short, but when you combine that major level of resistance with a range below us, not just this range, but multiple ranges over the past week or so, you can definitely see there's a good chance here that buyers may struggle and we may get that run back down into that trading range. And then I've got one more thing on this that you might not see right away, but is it me or is that a new range at the high? It almost looks like we have a situation where we had a big, strong push up, a trading range, a rotation off that low. Now, what do you think? If this rotation, if they hold and keep going higher, that's fantastic. But if they don't, what's going to happen? It's going to want to what? It's going to want a pendulum swing back in the opposite direction. The amount above will be the amount below. And I would imagine if we end up back into this pendulum swing, I would imagine this range down here gobbles that thing right up and runs it back down into those lows down bottom here. So this range right here, that little tiny range right there, is also, I think, a very big clue. Again, maybe not by itself, but when you stack all these clues on top of each other, that's where we get all these profitable trade ideas right on our radar every night. So how do we trade this right now? We know the breakout is possible. We definitely can see possible for the breakout. The buyers have control, but we got to get a breakout going higher. I can definitely short this thing, but the buyers have control. So we may have to be what? A little bit careful on the short side here. Okay, let's talk about this for a breakout. Now, when it comes to breakouts, remember those 4 breakout patterns we talked about. One would be a strong pop up, shallow pullback, higher high in price. Traps, baby. Love that setup. One of my all-time favorites, right? Love those setups. Okay, that's a 2-try breakout, 2-try trap. Okay, again, think about, and it's a ways away, 114.84, 115. That's the next big objective. We'll know more, obviously, when we get that first leg equals third leg once we go higher. Or it's a pop and a grind. Okay, that's an even easier one. Draw the channel off the high, bring it down off that low, find those prior swings, buy those traps or those failures off that low. Again, I'm not going to go over all those setup ideas, right? We covered that earlier. Or maybe, of course, it's a pop up, it's a pull back, it's a jump off that moving average. There's your 1, 2, 3 breakout, right? 1, 2, 3 breakout pattern. Grab that first test, right? First test is always the best test. There is a chance here. There is a chance, obviously, we may just blast running higher like that. And you could probably go in and find a bigger channel up there and look at that as a 1, 2, 3 breakout. That will also work as well. Just be aware, though, just a heads up on this, if we always want to use the most recent channel, okay? So if we see something like this, for example, right, if we go like this, 1, 2, and then jump like that, right? I'm not going to go out and use the bigger channel in most cases. Make sense? I'm going to go out and use the more recent channel, that one like that. Hopefully that kind of makes clear on that, right? So watch out for those as we go higher. All right? Think about that sequence I talked about earlier. And then as we go lower, or could I short the top off this? You definitely can. Right? You definitely can. You know, let's say, for example, right, overnight they come in, they retest the high. Perfect. Good for them. Buyers try once, buyers try twice, because no smart money trader's buying that pullback, right? There's no smart money buying that pullback, right? The smart money's already in down here. They're in down here, right? They're not buying way up here. Remember, to earn the right to be called the smart money in the market, you don't buy high by definition, right? So buyers, of course, up here are the weak hands. Again, we're very bullish, so we have to let those buyers kind of dig their own grave because we have to get some sort of catalyst. Right? If I'm going with the trend, there's plenty of momentum to help my trade succeed. But if I go against momentum like this, I need some sort of catalyst, right? And the stop losses are that catalyst. There's that 2-try failure. And of course, as we go lower, find that hidden channel. You got this, right? This is a great possible short off the high. It's a 2-try failure into that first test as we go. Okay. I also think too, a little trap of the high here. Here's a 1, here's a 2, here's a trap. So if they don't retest that high, right? If they don't go up and retest that high, we may see what we call a crown reversal. Okay, these are the most aggressive variations of this. We're at resistance with a range below us, which is exactly why you could take that trade. Again, think about 1, think about 2, that trap high. And what you want on this is you want a nice, strong signal candle closing firmly below the moving average. Okay, then you know all the stops right here are a sit and duck for that run back down into that trading range, right? What if they just punch going lower? Yeah, that's where fun stuff happens, right? Strong move, shallow pullback, lower low, traps, baby. Good short. I like that short. I like even better, channel, bingo. That's a good trade. That's a good trade. Or we pop and we grind running lower. You got this. Mark that low. Mark that high. You got this, right? Above that high for that short. Okay? Think about those as we roll over. Or we end up holding, pulling back, and blasting, right, as we go lower. Big, strong jump going lower, finding that low, marking that channel high, grabbing whichever of the entry patterns we can get off the high of that channel. Where's my targets? Easy. Back down to bury those lows here, and possibly from 110 to 105. Okay, oil loves a $5 move right now. It would be pocket change for oil to go from 110 to 105 tomorrow. If you got an extra contract, leave that runner as we go. Really, right now, it's a matter of, do we see a breakout going higher? Does that breakout fail off the highs? Does it roll over at the open and then give us those shorts? That's the question right now. Only time will tell. No matter what, though, we are ready for Tuesday. And like I mentioned earlier, get a holiday weekend coming up, get the end of the month. It's definitely crunch time right now for traders the next, 48 to 72 hours in the market. Speaking of which, tomorrow morning, 8 o'clock Eastern time, now you know the game plan for tomorrow. Tomorrow, we're going to trade that stuff together. If you're looking for a great place to learn and trade along each day, if you're missing the best trades or you're taking too many losses, my trade room is designed for new traders to start getting consistency in their trading. My trade room is designed to break bad habits of more experienced traders. I have all the templates, all the worksheets. I'm just waiting for you right now. So what I'll do is I'll put all the membership links, all the free course links, all the trade room links. I'll put all that stuff in the description of the YouTube video. I'll put a big button for you on the website below me here tonight. So hit that button, grab that link, get registered. Start with a free course, learn the basic strategy, right? Get yourself trading the setups that we in our trade room, and then upgrade to your advanced membership. And we'll see you tomorrow morning in the trade room, 8 o'clock Eastern time, every day this week. Guys, hope you enjoyed the video tonight. Hope you enjoyed it. Hope you like it. If you do, hit that like button. Make sure you subscribe. Drop me a question in the comment section if you guys have any questions. And you better come back here and see me tomorrow night. We'll do this all week here this week. All right, guys? My name is Joseph. Be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye-bye for now.